economy that's even number 4 to grow at 6%. There's no other economy that's doing that. So I'll tell you, the foreign investors' perception of India has changed dramatically in the last 5 years. I was in the US and managing money. We spent every quarter on your earnings call, every analyst would ask the company what their China strategy was.
Hello and welcome to this very special series where we bring you insightful and exclusive conversations from some of the top voices behind India's mutual fund industry. And today we are joined by Mr. Avinash Satwalkar, who is the president of Franklin Templeton India. Thank you so much, sir, for taking out the time to talk to us. Just wanted to understand, we have seen Franklin Templeton going through all this transformation in India, right? When there obviously have been certain changes in terms of the team, the philosophy and everything. So just wanted to understand, where Franklin stands, in India for now and what the focus is from here.
Sure. Firstly, thanks for having me. So Franklin Templeton has been in India for now almost 30 years. And I think we've seen the ups and downs of the markets as well as the development of our industry itself. In terms of the transformation you're talking about, I wouldn't say necessarily it's a transformation as much as we've essentially been on a rebuild journey for the last, I'd say, 3-4 years. And a big part of that has been driven by a very core belief that we've always had, which is putting clients first. And that's one of our ingrained values. And so we've continued to focus on that. And so that every decision we've taken has been with that in mind. When you're talking about the team changes, we've added and we've changed our fixed income team. We've brought in a new CIO. We've expanded out our institutional sales team. So there have been a number of different changes. And I think most of all, we've brought in a whole series of new products, which historically Franklin Templeton hasn't done as aggressively. So I think those have been some of those transformative changes, if you will.
Right. And especially it matters when we've seen like India evolving in its whole growth phase as well. So trying to lead like an active fund management company in this era, like how does that work, right? Because you also have to keep in mind that there's a rise of passive also into in India as well, obviously many people have been trying to adapt to that. So how does that happen? How has Franklin also been trying to adapt that, but ensuring that active fund management also evolves along with it?
So I have a little bit of a bias because I've been an active fund manager my entire life and career. But passives do have a place in an investor's portfolio.
Correct.
It's as simple as that, right? So they will both coexist. I feel India has moved a lot towards passives. Not as much as obviously the West, but I also feel that it might be a bit too early. Right? I do think active still has the ability to generate alpha that's different from passives. And so they will coexist. And so for us at Franklin, what we have done, we're in the process, obviously. We're very well known as active managers. We're working with our global passives teams to bring in some of that, because passives is not about fund management.
Correct.
Right? So the fund management part is local, domestic, driven by our teams here. But passives is more about operational excellence and your ability to shrink the cost structure.
Right.
And that we've been doing globally for a number of years. And so we're bringing that expertise back into India.
Right.
So once that comes through, you'll hear from us on passives as well.
Right. You mentioned about, that global perspective as well, right? I just wanted to understand, because you might be in touch with many global investors who look at India in a certain way. Of course, there has been a shift in the way, like there was a huge inflow and then there was outflow. But just wanted to understand, with from your conversations with them, or the way you obviously must be talking to many experts out there, right? To understand how they see India now being placed, because we understand that India's growth story is there. But obviously there might be some other emerging markets also coming up, right? So just foreign investors, perception of India right now.
So I'll tell you, the foreign investors' perception of India has changed dramatically in the last, I would say, 5 years.
Right.
And a good part of that is because of how India's growth story has also changed and evolved. We've always grown well, But the way we've grown this time around, the investments that the government has made in infrastructure, see, these are really long-term kind of benefits that come through. And that understanding is now starting to get into the mindset of the foreign investor. So I'll give you a simple analogy. So in the early 2000s, when I was in the US and managing money, we spent every quarter on your earnings call, every analyst would ask the company what their China strategy was. China had had gotten into the WTO at the end of the 90s or in the 90s, and then had basically started to get more of an interest foreign investors started to get more of an interest in it. So everybody asked you about what your China strategy was, right? If you're a consumer company, how are you going to deal with the billion Chinese that are waiting to buy products? And if you're a manufacturing company, when are you going to put your plant there to reduce your costs, right? I think we are at that cusp now, where investors are asking now what your India strategy is. So I think it's on us now to try and make that shift to make sure that we become that hub for manufacturing. But there is a shift in thinking. Even now, there's a better understanding of the fact that India is always going to be a slightly more expensive market than pretty much any other emerging market. So looking at it from a valuation argument, I've been hearing this now for 30 years, right? India is expensive. Well, India's always been expensive. It becomes less expensive and then becomes ridiculously expensive.
Correct.
That's the band you're trading in. It never gets cheap by traditional metrics. So, but there is also no growth like India. So when you say other emerging markets are growing, not at the size we are, right? We're number 4 now. We're going to become number 3 soon. So for a economy that's even number 4 to grow at 6%, there's no other economy that's doing that. No other large economy, right? So I don't see that. I think that appreciation is now getting through to the foreign investors. So anytime I see outflows, my view is that it doesn't really matter, because they will turn into inflows very soon. Because they've got no other alternatives in the market.
Right. But with all the optimism, there also, you need to be aware of the risks or fear that you might have, right? So anything like that in your mind?
So, of course, no market is without risks, right? For us, the number one risk, quite honestly, is the fact that if we stall out on policies and we do not continue to create policies that are attractive for foreign direct investment, we will have, I wouldn't say it will be a negative for us, it will be a lost opportunity for us, right? So if we are to get to, I think, Prime Minister's vision of Viksit Bharat, we need to be able to get that foreign direct investment at a multiple higher than where it is today.
Right.
And that is only going to happen when foreign investors or foreign capital providers start to feel comfortable.
Right.
And so that is, in my mind, it's more a risk of lost opportunity. The other risk, I would say, is broadly, yes. There are pockets of the market that are ridiculously expensive. That I think you have to be very careful about, right? Because I don't see, as an investor, you're buying future cash flows, you're buying future earnings. If you're paying up for that, then the value is going to be less. It's going to take that much longer, unless it outperforms significantly.
Right.
And now, given where some of especially on the smaller cap side, where those valuations are, they're fairly stretched, right? So I think you have to be very careful and very picky. So I'd say those are but those are no different than any other market.
All right. Thank you so much, Avinash, for your time. It was a pleasure talking with you, and we will see you on the next episode.